Good day, welcome to our web class. This is Teacher Jeans. We will be discussing your Module 3 or your Week 3 for your Quarter 1 in the Fundamentals of Accountancy, Business, and Management 2 subject. So at the end of this lesson, you are expected to be able to prepare a statement of comprehensive income for a service business and to prepare a statement of comprehensive income for a merchandising business. Last video, we were able to discuss the difference between income statement and comprehensive income statement. So looking back, income statement, it presents an entity's revenues and expenses and the resulting net income or net loss. While for the statement of comprehensive income, it is more complicated. So it is income statement plus other comprehensive income. Again, revenues or income is defined as an increase in the economic benefits of the entity that may be a result of enhancement or inflow of asset or such decrease in the liability that causes equity to increase. And for the expenses, it is a decrease, the opposite of income. It is a decrease in the economic benefits of an entity that may be a result of deterioration or outflow of assets or such increase in liability that causes equity to decrease. The difference between service business and merchandising business or merchandising company is that the service, from the word itself, it provides service in order to generate revenue, while for merchandising, you have to sell goods to the customers in order to have a profit. As shown on the last video, so this is an example of the statement of comprehensive income. You have the service revenue less the expenses. You will arrive at your net income. So if the service revenue is greater than your total expenses, then you will have a net income. But if the expenses is greater than your service revenue, then you will incur net loss. Another example for a statement of comprehensive income. So this is for the merchandising business, which this business is selling goods. So you have net sales less cost of goods sold. Then you will arrive at your gross profit less the expenses. You have the general and administrative expenses. You also have the selling expenses. Then you will get your net income. By this time, we will discuss the single step on how to prepare the statement of comprehensive income using this one. So this is for a service business. So all revenues are listed down in one section, all expenses are listed in another, and the net income is computed using a single step, which is total revenues minus total expenses. And do not forget, in preparing the statement of comprehensive income, it must have a heading, the income account, the expenses to get your net income or your net loss. So first part of your statement of comprehensive income in your service business, you have the revenues. Aside from heading, you have revenues, then followed by the expenses, then you'll get the net income if you have a positive result, and net loss if for negative result. So this is an example of your statement of comprehensive income in your service business using the single step approach. So heading, you have learning is fun company. Then you have to write here this part, statement of comprehensive income as of December 31, 2016. So here in a single step income statement or comprehensive income, there is a single subtraction in the whole statement, as all the incomes here, the gains, the revenues are added together. There you have there 100,000 to calculate the total income. And then you have the expenses. So you have salaries expense. You have to add up all the expenses. Then you have here total expenses 76,000. So you have to subtract the revenues to the expenses. 100,000 less 76,000, you'll get 24,000. So it's a positive result. Therefore, you have net income. So you already learned the single approach statement of comprehensive income for a single proprietorship business in the previous slide. So this time we will discuss about the multi-step approach. So this is for a better understanding for merchandising business. So it is termed as multi-step because there are several steps needed in order to arrive at the company's net income. So you already learned the single approach for the statement of comprehensive income for a single proprietorship in a service business. So this time, so we will have the parts of multi-step approach. So first, you have the sales. So this is the total amount of revenue that the company was able to generate from selling the products. Next, you have the second part. You have the contra revenue or contra sales. Okay, so it composed of the sales returns and sales discounts. So sales returns, this record customers, returns of customers or allowances for such returns. So it occurs when the customer returned their products for reasons such as, but not limited to, defects or change of preference. You also have sales discount. So this discount given to the customers who pay early and also known as cash discount. So sales discount is awarded to customers who pay earlier or before the deadline. Okay. Then for the third part, you have the cost of goods sold. So this account represents your actual cost of merchandise that the company was able to sell during the year. Okay, how to get the cost of goods sold? You have to add your beginning inventory and net cost of purchases. Okay, remember that. Remember the formula in getting your cost of goods sold. You have to add the beginning inventory and your net cost of purchases. So what is a beginning inventory? So that is the amount of inventory at the beginning of the accounting period. So that will also be the amount of ending inventory from your previous period. So again, cost of goods sold equals beginning inventory plus net cost of purchases. You already know what is beginning inventory is. So we will have to compute for your net cost of purchases. So the net cost of purchases is equal to your purchases plus freight in. Okay? So purchases, your purchases plus your freight in. So your purchases, how to get your purchases? Your net purchases, you have to purchases minus your contra purchases account. So if you have sales return and sales discount as your contra sales or contra revenue, we also have contra purchases. So that is your purchase discount and your purchase return. So when you say purchase discount, that is account used to record early payments by the company to the suppliers of merchandise. And when you say purchase returns, that is an account used to record merchandise returned by the company to their suppliers. Okay, so again, cost of goods sold can be solved by adding the beginning inventory plus net cost of purchases. How to get the net cost of purchases? You have to add your net purchases and your freight in. Okay, so what is a freight in? How to get your net purchases? You have purchases less purchase discount and purchase returns. And how to get your freight in? Okay, what is freight in, by the way? So it is an account used to record transportation cost of merchandise purchased by the company. So that is called freight in because that is recorded when goods are transported into the company. Okay, and also you have to get your ending inventory. So that is the total cost of inventory unsold at the end of the counting cycle. So after getting your sales, so less sales less cost of goods sold, you will get your gross profit. Okay, again, sales less cost of goods sold, you will get your gross profit. The fourth part is a general and administrative expenses. Okay, so these expenses are not directly related to the merchandising function of the company, but are necessary for the business to operate effectively. So the fifth part is the selling expenses. So these expenses are those that are directly related to the main purpose of a merchandising business. So the sale and delivery of merchandise. So these do not include cost of goods sold and contra revenue accounts. Okay, so gross profit less general and administrative expenses less selling expenses will yield a net income for a positive result and net loss for a negative result. Okay, so this is a bit confusing. So again, we will have to summarize this one. How to get your net sales? You have sales less contra sales or contra revenue. How to get your cost of goods sold? You have to add your beginning inventory and your net cost of purchases. How to get your net cost of purchases? Okay, how to get your net purchases? You have the purchases less the contra purchases. So what are those contra purchases? You also have purchase discount and purchase returns. Again, to get the cost of goods sold, you have to add the net cost of purchases plus freight in. After that, you have to deduct sales less cost of goods sold. You will arrive at your gross profit. Then the gross profit, you will deduct the general and administrative expenses and selling expenses. You will get your net income. Net income if positive result and net loss if negative result. I hope you were able to imagine what I have discussed in the previous slide. So it's very confusing and very complicated, but we will have a detailed illustration for that. So you have here your heading. Then again, to get your net sales, you have sales less contra revenue. This is your contra revenue, sales return, and sales discounts to arrive at your net sales, because you will get your gross profit after deducting this cost of goods sold from your net sales. So this is the formula. Okay, so you can zoom it. You have here your beginning inventory. You have here the net purchases, how to get your net purchases. You have your purchases less purchase returns or purchase discounts. So these two are what we call the contra purchases. So you have to add up your freight in, okay? And then you will get your cost of goods sold or cost of goods available for sale. Then you have to less the ending inventory, okay? Don't forget to less your ending inventory. And you have here your net sales less your cost of goods sold. Okay, this is your the amount. Okay, then you will get your gross profit. Okay, then the next part, you have to identify your and record your general and administrative expenses. So here you have salaries, rent, depreciation, utilities, and miscellaneous. Total of 51,000. You also have a different presentation for your selling expenses. This one. Okay, so you'll get your net income. How did you get your net income? You have here the gross profit less your general and administrative expenses less your selling expenses. Then you will arrive at your net income, because it's a positive result. If this is a negative one, then you incur net loss. Okay,